from the Dugascopy TV studio in Geneva. We are back with our weekly technical analysis with independent technical analyst Bruno Estier. Welcome to the studio, Mr.
Thank you. Good morning, Daniel.
So last week we were expecting the US market to break up. Actually, has this happened already?
Well, not yet, but as we see, the only clear signal we got is on another market, namely the bond market. The US 10-year yield has made a new high above the 225 level, which was the previous high here in March. It has reached the second upper resistance trend line around 230, and by doing so, it's making higher highs following higher lows, so it is confirming the uptrend. And we see the momentum here on the stochastic is moving up. Also on MACD, that means there will be more upside later on.
Mm-hmm. Is this the reason why the S&P 500 is still in a range, is still flat?
Usually when interest rates rise, it has some negative impact on the US equity market. This new correlation is coming back. And indeed, there is a good news and bad news on the S&P 500. The good news yesterday or last week was that it did not sustain the breakdown below the support trend line. It rebounded and closed the week relatively high. And right now it is just pulling back again to the support trend line, but it's still within the triangle. The bad news is obviously that we are still waiting for the up break.
What is the time window? How long do we have to wait?
Well, we hope not too long. It's now still a normal rising ascending triangle, so we know that it has to break before the two lines, the upper lines and the rising down line are meeting, so that would be sometimes in June. The breakout usually occurs before. It has pulled back a little bit from the top. It's still within the pattern. The momentum has turned up, so we'll hope that in the coming days, maybe before the end of the week, it should break up.
Let's also have a look to the Japanese market. Is this also affecting?
Yeah, the fact that there is no breakup induced probably some investors to take some profits on the Japanese market. We see the outperformance of the Japanese market has slowed down somehow. We see here the relative strength is moving down a little bit in the last 2 weeks. And we see also that the momentum is slowing down here with a so-called bearish divergence. That means that the clean uptrend might be broken, but that's not a reversal of the uptrend. It's just going into probably sideways patterns before it later on reach new highs.
Is the situation also alike in the Chinese market?
The Chinese market has been stronger than the Japanese market, and we saw that with the ratio of relative strength versus the S&P, which was rising. Also, compared to other emerging markets, the China was one of the best outperformer. Now, of course, this consolidation is due to the fact that the momentum is toppy a little bit, but it's relatively well behaved.
Mm-hmm. Could this become a major top?
Well, I don't think so. If we look at the daily charts to see if there is really a sustained price move on the way down, we see this is not the case. We are holding the support around 14.5, and also now as the price is reaching the bottom of the trading range, we see that the oscillators are all the way down, has crossed up again, so most probably the uptrend should resume.
Mm-hmm. And what is the situation in India?
India has been correcting or taking profit for longer. We see that on the relative strength, the Indian market has been underperforming the S&P a little bit for already 2 months. And we are coming close to some support area here, but no signal yet on the price pattern, even though the situation is almost ready. We see here that the oversold weekly stochastic is in the oversold zone where it could cross up again, but we are still waiting for the signal.
Mm-hmm. Thank you for this view on the emerging economies and Asia. So is there any market that is outperforming the S&P 500 right now?
Well, a month ago we discussed about oil prices, and as we see here on the Russian charts, we have on the upper panel in black the oil price movement. And we see that it's very close to the dotted line, and the dotted line is basically the relative strength of the Russian market versus the S&P 500. So the oil rebound is leading the rebound of the Russian market, and this Russian market has been having a very nice technical pattern. It's making higher highs and higher lows, and also it's reached now the upper Bollinger Bands, weekly Bollinger Bands, and it's confirming the uptrend.
Mm-hmm. And is this also the case for Brazil?
Brazil was also influenced somehow by oil, and we see a relatively similar pattern, but somehow a weaker one. Of course, relative strength is rising, as we saw on the Russian market, but we see the price is below the upper bands. So the potential is probably a bit less.
Mm-hmm. So, and finally, what is happening in Europe right now?
Well, Europe was outperforming. That was the relative strength which was rising against the S&P 500. It has been pulling back in the last 4 or 5 weeks. But there is a good news. The good news is that last week it left a spike which rebounded just on the former big resistance trend line, which was the big signals for the way up. So now we're waiting for the move to resume on the upwards side, but we might have to wait a little bit. Why? Because the momentum is still on the way down on both sides, the stochastics and the MACD. That means that probably it's only a bottoming process, which can take a few days. Mm-hmm. So patience is really the key word this week.
Thank you very much, Mr. Bruno Estier, for this
welcome.
analysis today. And thanks for watching. Do make sure to keep clicking back on the Dukascopy website for latest updates and exclusive interviews. Have a great day and see you next time.